Time now to get to our final trade of the day. Luke Rabari, CEO of Equity Armor Investments, is standing by in New York. Hello, Luke. Clearly, there's plenty of uncertainty with the escalation of the U.S. dealings with Iran. How is that affecting your trading stance?
Yeah, I think there is a lot of uncertainty out there, but as you know, we've kind of been set up for more volatility for 2020. And having said that, this move didn't really affect us. Actually, we had some volatility on and it worked out for us. But our investment theme for 2020 hasn't changed. We still want to be in stocks that pay a good dividend, that have good cash flows. We want to own a little bit of tech, especially in the chip sector. So we're sticking with our plan, but we expect more volatility through the rest of the year.
What do you think about the spike of prices in gold and in oil?
The spike in oil was expected, but what was unexpected that it was so small. And as you can see, oil is kind of basically going back to flat, not much of a move. But again, we've been consistent in this. There's plenty of oil around in the world. The U.S. is now the swing producer, and also a lot of the production companies, this pullback in oil prices has hurt them. They've got a lot of hedges on. There's a lot of pressure coming from the higher strikes in oil. They've sold a lot of calls against future production. And you got to remember, be careful with these oil stocks and the producers. Even if the price of oil goes up, until their hedges are gone, until they're taking out, those companies aren't going to benefit from that. So if you're going to buy some of these companies that have big hedges on because you think oil prices are going to go up, oil prices may go up, but the stock of these companies isn't going to go up because they're not going to participate in that higher price. Gold, you can have some. I'm not much of a believer. We've traded in and out of it. We don't really make it a cornerstone of any portfolio right now. We think there's some better places to be, some more liquid places to be, but be careful of the oil patch. You've got to know what you're doing there.
What would be a potential trade for you this week?
Some of the trades that we did is we looked at some of the levels and sold some out of the money puts on some positions and trimmed down some of the positions where we thought that we might run into some difficulty later, but not much of a difference. We're kind of sticking with our plan for 2020, and right now we don't have a lot of rotation going on. I still do believe that there's going to be more volatility. Volatility is historically at a low level, and I think if you're going to own some risk assets, you need to own it with some hedges or some volatility. We do both here.
Thank you, Luke. We look forward to having you back on our show.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.